Hello, today is Tuesday, May the 1st, 2012. An inside day is defined as a day where the lowest level is greater than the previous day, and the high for the session is lower than the previous high. I don't like the word inside day, I'd rather inside period, because the only way an inside day would mean anything is if you look at the daily chart, but we're looking at the daily chart. However, this information can be used on 5-minute time frames weekly. It all works in as the same. It's an indecisive method or an indecisive period, and sometimes it can actually give you bullish or bearish looks within it, depending on, of course, the situation. This period was a major inside day, for the high was a little bit lower than the previous high, and the low was extremely much higher than the last one. Therefore, you have a pause after an up move. The situation like that, coming from a flat 18 period average like this, that would be bullish, and it went higher. You have an inside period in here after you had a 2-day breakout, and you had a little bit of a pause. Again, another bullish situation. The down move that occurred in here happened after an inside day. And this was a situation when the 18 period average was going lower, and it was taking its sweet little time to either make a move to 30, which it obviously did, or that to break higher and make this breakdown a failed move, which obviously did not happen. So therefore, we have a situation where we have came down within this low. I'm going to zoom in on this chart, triple zoom, and just take a look at this more recent action. So we've seen now that each of the last 3 days has found pretty much perfect resistance within the front weighted 18 period average of closing prices, piercing below the 18 period average of lows. Therefore, yes, it is still in a downtrend. That gives you reason to believe that it is a bearish situation. However, the situation going from this low at 29.96 up to this high, well, it has successfully retraced that 61.8% level, which was roughly around this line. So therefore, that can give you that of a bullish case that has found support. It's been really having a battle up at the 31 and change level, and a break above that is what's going to happen on the next day, if of course that's what it means. And then this moving average is either going to start to go sideways or barely start to go higher. So it can work for both a negative and a positive, or a bullish and bearish situation. Really, I see no clear-cut advantage on one side or the other for the short-term analysis. Let's zoom this, or let's get this back to the original viewing. And we're going to take a look at some previous prices within silver. This is the data, and the inside day today has got a low 8 cents lower than yesterday. This is from forexpros.com. That's the for the XA, or the silver to US dollar ratio. So 31.32 was the high today, which was 8 cents lower than yesterday, and the low was 19 cents higher. It's a little after 2 p.m. Eastern time. It can still potentially break below 30.57. If that's the case, that's a definite bearish situation, and I would be considering another test of 30 to come soon, or we break above the 31.40 mark, or over 31.40 to make it so it's not an inside day. And that just like going lower would be bearish, going higher in this situation would be stating that it's ready to break through this. For if we look at some Fibonacci analysis, from this breakdown level here, which is 32.01, to this low, which is 29.96, then what we can do is we can take the 32.01, divide it by the low, and then we'll put this to the power of 61.8%. And on a regular calculator, look for X over Y. So 0.618, we'll multiply the low again, And the 61.8% Fibonacci from this low and this high happens to be 3121. So therefore, it hit a little pierce above, bigger pierce above, but it's breaking above it, but it hasn't held above it. So for the selling from point A to point B, this being A, for that to be a failed move, it needs to break and hold above 3121, I think it was, yeah. Well, it's been breaking above it, but it hasn't held above it. So that's what I mean by breaking and holding above it. It has broken it, it just hasn't held it yet. Therefore, because it's been doing it for 4 days, any time that it breaks out above this is a really nice bullish looking scenario that gives us a price objective up towards this previous high at 32.66. And the reason for that high is that's the first Fibonacci from that high up here and towards this low. Moving on forward within short-term analysis, we can see that it hit the 30 level, and the 2 candles after it is where it hit its high of 31.42. The previous period yesterday went to 30.57, so how much of a retracement was that? Or what was the 61.8%? We'll take the high of 31.42, and we'll divide it by the low. And the low, of course, again, is 29.96. And we're looking for 61.8% on the way down, which is 38.2% on the way up. So we'll do this to the power of 38.2. Multiply this by 29.96, and that's 30.51. So the move yesterday was 6 cents above that significant Fibonacci support level, which, again, if you come back down to this level, it's really telling me that this rally short term is looking to fail, and that we'll have most likely another retest of this 30 level. But as long as it stays above 30, 42, 43 in that area, then it can still be successful holding and staying above that level. Okay, I'm going to wrap it up right now because it was a little longer than I wanted to as we're approaching 455 seconds. And thank you for tuning in and have yourself a great day. Bye-bye.